Now let's see purchases. Is it real or nominal? On purchases, this may be named as real account. Okay. On sale of those purchased item, this will be named as nominal account then. So purchases could be real account as well as purchases could be sometimes nominal account also. While purchasing the means stocks, usually we call that as a real account. On sale, those things are going to be debited to the P&L account. To the extent of purchased items sold, no, is called nominal account. Right. Purchases being 5,000. Purchases being 5,000. What about this purchases? Named as real account. And how much you sold on that? We have opening stock, right? I am going to add the opening stock with these purchases. If I add the opening stock with the purchases, you will have 6,000 rupees here. What is that 6? Goods available for sale. How much goods you are able to supply, sir? If somebody comes to our shop and inquires about that, already I have 1,000 rupees worth stock in our office or in our godown. We purchased another 5,000, so almost 6,000 rupees worth stocks available in our godown. How much stock you want? Right. So this is called goods available for sale. And in the year end, we have 3,000 rupees worth of stock unsold in our godown. What does it mean? Minus closing stock. Minus closing stock. 3,000. The balance 3,000 rupees is nothing but sale. Sale of purchased item. Okay. Sale of, or this is named as cost of sales. Cost of sales. Otherwise, this is named as adjusted purchases. Adjusted purchases. That 3,000 cost of sales, otherwise named as adjusted purchase. To the extent of stock available, how much of stock sold? You just find out that stock is now expired. We don't have that stock. Then this will be always nominal account transferable to the trading account. Only this amount is transferable to the trading account. This will be transferable to trading account because trading account is the nominal account. It is very confirmed that any purchased item sold, that becomes nominal account. Expenses. Asset means whatever the things you possess or for whatever the things you pay, for that you have the benefits in the future. At least once or n number of times in the future. I have stock unsold in the year end, can be saleable in the next year. I can make a profit out of it. So I have a revenue in the future only once. I have a plant and machinery, or I have a land and building. As on 31st March year end, that land and building could have been let out for n number of years. I can generate the rent year after year. So from this, it is very simple to understand. Anything you possess, because of that possession, you may enjoy some benefit one time or multiple times in the future. Then it is called an asset. This purchases, I am not sure whether it's going to be sold in that same year or not. So I am not aware about whether the purchased item sold in that same year or not. I can consider the purchases either being real or nominal. There is no any harm in classifying in the both way. Okay. But to the extent of purchased item sold in that year by the end of 31st March, we don't have the purchased account in our hand to be enjoyable in the future. If any spending don't have, or if we don't have any benefit to the near future, will always be named as expenses. Expenses will be nominal account. Even plant and machinery. You think the plant and machinery being an asset will have a life for more than 5 to 6 years. But surprisingly, the asset we purchased got collapsed halfway through because of mismanagement or misutilization. When we inquired with the seller says, sir, it's a misusage of yours. So we are not in the position to repair this or replace this. Now the amount we spent for purchasing the plant and machinery is totally waste. We don't have any benefits to be enjoyable in the near future. So the entire plant and machinery, though you thought the asset, though the plant and machinery is thought as an asset, no more asset debit to P&L account. Debit to P&L account. Is that okay? While debiting the plant and machinery to the P&L account, this is always named as nominal account only. Is that okay? Same logic is applicable here also. Purchases. Purchases is either real or nominal. And when you adjust the opening stock and closing stock with that ultimate purchases is always nominal account only. You should not have any confusion. Sir, is it nominal or real? No, this will always be nominal account only. The cost of sale. Cost of sales where we have not added the profit with that. Opening stock plus purchases minus closing stock will be called as cost of sales or adjusted purchases. That will always be nominal account. Nominal account. This could be equated with what? Rent account. Rent account. Okay. To have a better understanding, I am going to give this way. The purchases account is equated with the rent account. I paid 5,000 rupees rent. Opening stock is nothing but opening advance rent. I have paid rent in advance in the opening. Any rent paid in the opening or is an advance. What's that? Okay. Rent in advance. Rent in advance is asset. Am I right? This rent in advance we may have opening also as well as closing also. If we have rent in advance closing, what does it mean? This is asset and it will be subtracted from the rent account. And if I have the advance rent paid in the beginning, then what is this? Also be now added with the opening, means rental expenses. The opening rent in advance is added with the rental expenses. Closing rent in advance is subtracted. It means, assume that 1,000 rupees is the rent per month. 1,000 rupees is the rent per month. For your better understanding, we have paid rupees 14,000 rupees in that year. Okay, rent paid is how much? 14,000 rupees in the year 2020-21. In the year 2020 and 21, the rent paid is 14,000. Is that okay? The rent paid is 14,000 rupees. Clear? Now, come on. Rent paid 14,000. What is the rental expenses going to be debited in the P&L account? How much you are going to debit to the P&L account? If the rent being 1,000 means for the 12 months, you have to consider only 12,000 being the expenses. But if you have paid 14,000 means, what does it mean? You have paid 2,000 rupees in advance. So the rent paid in advance should be subtracted from the rental expenses because the entire 14,000 is not the expenses. Only 12,000 rupees is the expenses. The 2,000 rupees paid in advance meant for the next period. Still we have the time to enjoy the benefit in the future. Whatever the payment you made as on the year end, having any benefit to be enjoyable in the future will always be named as an asset. So now that one is going to be subtracted minus rent in advance. Rent in advance closing is subtracted. So the rental expenses to be debited to the P&L account is 12,000 rupees. This is rental expenses debited to the P&L account. This should always be nominal account. This should always be nominal account. Is that okay? And the rent paid in 2021 and 2022, the rent paid being not 14,000, this is 13,000. What does it mean? How much rent you have to pay for 2021-22? Again 12,000 rupees, but already there is an advance. Okay, so you have to subtract that 2,000 rupees. 10,000 only is required to be paid in 21-22. But you paid 13,000. What does it mean? 3,000 is meant for the next year. Means 22-23 years one. So the rent paid in 2021 is this one. So 21-22. Rent paid being 13,000 rupees. The rent in advance of the previous year becomes the opening should be subtracted. So you need to pay only 12,000 rupees. As per this one, you have to pay only 10,000 rupees, but you paid 11,000. You paid 11,000 rupees. Okay, sorry, 15,000 rupees. Addable. Add rent in advance. Rent in advance. Opening. So when it comes for the 21-22, you paid 13,000 rupees. you are pretty sure that you just interact with the owner. Sir, last year itself I paid 2000 rupees in advance, right? So I paid 2000 rupees in advance. The balance should be only 10,000 now, but you asked so much. So 12,000, 13,000 rupees is the amount paid in the current year. Previous year itself also another 2,000 paid. So 15,000 rupees I paid. Like how much I paid for this current year? 15,000 rupees. But we are sure that we have to pay only 12,000 rupees. This is the nominal account. Then what about the difference between these two? The difference between these two, 3,000 is nothing but rent in advance for the closing. Rent in advance for the closing. So 13,000 rent paid. What is this? What is this? Nominal account. We say that. But really it's not nominal account, because to the extent of rent paid remains unenjoyed, unused, unexpaid, the year end will be named as an asset. Named as an asset. So here we came to know 3,000 rupees rent still, though we paid unenjoyed or unexpaid, will be an asset. This will always be real account. You should not again ask me questions. Sir, house are rent account. It's not real account, it's a personal account. Okay, it's a personal account. Asset account. Representative personal account. This is called representative personal account. Rent in advance means it represents the landlord to whom we have paid in advance. So it's called representative personal account. You cannot say that rent paid is always an expenses. Rent paid is always not an expense. Sometimes rent paid may be an asset. How? Exactly by the year end, the 31st March, the tenant says, sir, don't disturb me to get the rent month after month. I will settle the entire year's rent today itself. If the tenant says that I am willing to pay the entire 12 months rent today itself, can I do so? I can do so. Exactly on 31st March 2022, what I do is, sir, for the year 22-23, the 12 months rent, say 12,000 rupees, I will pay today itself in single shot. While closing the balance sheet, 12,000 rupees we paid for rent, still unexpaid, will be called as an asset, put in the asset side as rent in advance, which is a representative personal account. This can be equated with this one, this purchases. Purchases, the amount paid for purchases is 5,000. Similar to the rent paid is how much here? For the year 21-22. So we have paid 13,000. Opening advance is similar to the opening stock. How much is that? 2,000 rupees. That should be addable. 15,000 rupees. Closing stock is similar to what? Rent in advance closing, which is 3,000. The ultimate item being 12,000. This is the expenses. This is always nominal account because this payment is already enjoyed. So this is no more real account. You now equate this one and this one. This purchases as well as rent, you can equate these two. If you are able to equate these two, you are able to understand in much better way. So the purchase is nothing but a payment like rent. Payment like rent. With that, we add the opening stock similar to the opening advances. Subtract the closing stock, which is similar to the advances of advanced payment, rent paid in advance closing. Ditto. Then from this, it is very clear the opening balances and closing balances always be personal account, that to representative personal account. To the extent the payment we enjoyed, expaid will be the expenses nominal account. To the extent of payment cannot be said purely nominal account because it consists of some nominal account, some real account component also. It's a blend of those two. So that's why it is sometimes named as nominal account, sometimes named as either real account or personal account. That's your choice. The same way, the purchases in absolute sense will be either real or nominal. After the adjustment of opening and closing stock, whatever the leftover will be called as cost of sales or adjusted purchases. That adjusted purchases should always be nominal or expenses only. Nominal or nominal account only. It cannot be asset anymore. It cannot be asset or nominal account anymore. Is that okay? Hope so you can understand. Now, how do I pass the journal entry for this? Let's see here. All these things are easy to remember now. So, purchases is real account and cost of sales are adjusted purchases either nominal or see, this is always nominal account. Purchases is either real account or nominal account, but adjusted purchases, which is nothing but after the adjustment of opening stock and closing stock, named as cost of sales or adjusted purchase, That should always be nominal account transferable to the trading account. Now, only this amount is transferable to the trading account. Now, how do I arrive this? How do I arrive this? Let's see here. I am going to pass the entry for opening stock. Another one is I am going to pass the entry for closing stock. And these two entries are going to be routed through purchases account. Routed through purchases account. See the journal entry for opening stock. This opening stock is going to be adjusted in the purchases account. Means it's an expenses debit now. So I am going to remove the opening stock. Usually opening stock is the debit balance. To remove that should be credited. Okay, where it is going to be debited? It's going to be debited to the purchases account. It's a part of adjustments of purchases value. Okay, so this is going to be addable with the opening purchase, means purchases. To add with the purchases by default debit balance, by adding with that, again you have to debit the purchases. By doing so, the opening stock will disappear. Opening stock will disappear. After that, the entry being 1000, 1000. 1000, 1000. For the closing stock, the journal entry being, closing stock is an asset. So, you debit the closing stock account to what? It is going to be adjusted from the purchases. I am going to subtract the purchases. Purchases is a debit balance. To subtract the purchases, I am going to credit it. So, two purchases. By doing so, the closing stock value being 3000 is posted here. Remember, how do I incorporate in the trial balance here? By incorporating these two in the trial balance, I am going to prepare a new adjusted trial balance. See, purchases debit and another credit. 1000 rupees debit means it is added with the purchases. 3000 credit means it should be subtracted from the purchases. So 5000 is the existing value in the purchases. With that, purchases debit 1000 is added, and the purchases credit 3000 should be subtracted. If I do this adjustment, now the adjusted purchases being 3000, this adjusted purchases should always be what type of account? Nominal account. Then opening stock 1000 we have, and opening stock debit side 1000, here credit side 1000. If you do adding of these two, what will be the answer in opening stock? 1000 rupees debit and 1000 rupees credit. If you add, what happens? Opening stock will disappear. Right, opening stock will disappear. And then closing stock, a new debit balance comes. Where will it come? Will come in the debit side of the trial balance. See, if you open the closing stock account, it will be having a debit balance of 3000. While preparing the trial balance, where will it go? The debit balance of the closing stock will go to the debit side of the trial account, trial balance account. So here, I am going to post here as closing stock. Rather than opening stock, it becomes closing stock 3000 rupees. Now, tally the trial balance. You will get the trial balance tally. So most of the times, the closing stock will appear where? Below the trial balance. If the trial balance consists of the closing stock, what does it mean? The stock is already adjusted. Otherwise, the trial balance, what is given here is adjusted trial balance. So in the adjusted trial balance, no, the opening stock and closing stocks are already adjusted through the purchases account. So we don't have any more balances in the opening stock as well as the closing stock. So we have now recorded all. Let's see now. I am going to again pass a transfer entry and then prepare the ledger. While passing the transfer entry, come on, purchases, where will it go? This will be trading expenses, carriage in trading expenses, administration, P&L account expenses, selling P&L account expenses, fixed assets, investment assets, debtors assets, cash assets, closing stock, asset only. Closing stock given in the debit balance of the debit side of the trial balance is always asset. Right? So hope so this will be an asset item. And sales, trading income, capital, loan, liability, creditors, liability. Now we can pass the entry. Okay. So far, Transferring the trading expenses to the trading account. Trading account. Okay, trading account. What is the entry? Expenses are going to be credited and trading account is going to be debited. So the entry here being trading account debit. Trading account debit. 2. What are the items are here? 2 purchases. 2 carriage in. 2 carriage in. How much is that? 1000. This is also 3000 and carriage in is 1000. Only 2 items are available, right? So I have posted these 2 items. This one is over. This one is also over. The total value being 4000 rupees. And this one, the trading income, I'll post this. Trading income is transferable to trading account. Trading account. What is the entry? Now the trading account is going to be credited. Sales account is a credit balance that should be debited. So sales account debited to trading account. To trading account. The value being 7,000. Now these two is going to be recorded. Okay, are going to be recorded. Administration expenses and selling and distribution expenses. Okay. This is nothing but profit and loss expenses are expenses related to the profit and loss account transferable to the profit and loss account. Where these two are the expenses, debit balances can be cancelled by crediting and it is transferred to the P&L account. So I am going to debit the P&L account. So P&L account debit. P&L account debit to what? Admin expenses. Admin expenses 1000 rupees to selling expenses. To selling expenses 1000 rupees and debit to P&L account 2000 rupees. Is that okay? Now we can prepare the trading and P&L account and then balance sheet. Okay. Trading and P&L account and then balance sheet. So, trading and P&L account and then balance sheet. What are the leftover items in the trial balance? 1, 2, 3, 4, 5 assets are there. I just post all these things in the asset side. Okay. Fixed assets 4000 rupees and investments 2000 rupees. Debtors 1000 rupees. Cash 1000 rupees. Stock in trade 3000 rupees. And in the liability side we have 3 items. Loan creditors. So loan value being 4000. Creditors being 1000 rupees. Capital being 5000 rupees. 5000 rupees. Is that okay? Now I have transferred this purchases from trial balance and posted here. Sales also transferred from the trial balance. Admin, selling and distribution expenses transferred from trial balance. So it is closed there. It is closed there. Now what are the leftover accounts to be posted here? Trading account. How do I post this now? In trading account, I have to post 2 purchases and 2 carriage inward. So 2 purchases, the value being 3000. 2 carriage in, the value being 1000. And then this one, trading account in the credit side, the opposite item, buy sales will be posted here. Buy sales, the value being 7,000. And then here in P&L account, two admin expenses, the value being admin expenses, 1,000 rupees, and two selling expenses, 1,000 rupees. Hope so we have posted everything. Now, close the trading account. If I close the trading account, I will get a balance of rupees 3,000. This 3,000 should be transferable to a P&L account. Further, the entry being transfer entry. From the trading account, it will be transferred to the P&L account. Okay, trading account to P&L account. The entry being debit the trading account. Okay, trading account debit to P&L account. To P&L account. This value being 3,000. By passing this entry, it is understood that this GP is transferred to the P&L account. So this is GP and I transfer that to P&L account here, 3,000 rupees. Now by tallying the P&L account, I get a balance of 1,000 rupees. This is for whom? Capital account. Okay. Profit or loss, net profit simply. For transferring P&L account balance to the capital account, the journal entry being what? Come on. P&L account should be debited, right? So P&L account debit to capital account. To capital account. This value being 1,000 rupees. By doing this, the capital account is going to be inflated or increased by 1,000 rupees. Now the capital account balance being 6,000. Close up tallying the balance sheet, it's 11,000. 11,000. So from this illustration, I have clarified whether purchases is real account or nominal account. In general, you can either assume this being real account or nominal account, just similar to a normal rental expenses paid, like you can equate that. Either you can consider this being real or nominal. But actually, the trading account consisted of only the expenses nominal account. The entire purchases cannot be recorded in the debit side of the trading account only after the adjustments of unsold stocks available in the beginning and end, which is nothing but opening stock and closing stock, adjusting the purchases. That will be called as a nominal account, named otherwise as adjusted purchases. That value will be always nominal account. You cannot classify this either real or nominal. This is always nominal account. So I have clarified this one. Now, the next point is, will the trial balance consist the closing stock? Naturally, the trial balance consisted of closing stock also when the adjustment entry for the opening stock and closing stock routed through the opening stock, so means purchases account. How the opening stock and closing stock adjusted in the purchases? How the opening stock is now transferred to the purchases by adding with the purchases. The closing stock is transferred to the again purchases account by subtracting, the entry being purchases to opening stock and closing stock to the purchases. By doing that, after this, if you prepare the trial balance, after passing the entries for the opening stock and closing stock, the trial balance will have closing stock in their book, not opening stock. Opening stock will disappear. In that case, when the closing stock appears in the trial balance, that closing stock should directly go to the balance sheet, not in the trial balance. You should not transfer this to trading account. If you are transferring that to the trading account, it's wrong. It will go to the balance sheets asset side only. Is that clear? So 2 points are noted here. One is purchases, whether it's a real or nominal, I explained. Second one is, if the closing stock appears in the trial balance, how do I handle that? So if the closing stock appears in the trial balance, that should be transferable only to the balance sheet, not in the trading account. Is that okay? Come on, make a note of it.